Welcome to Before and After, powered by Refinitiv. I am your host, Jamie McDonald. On this episode, our Before segments will focus on the upcoming UK election and what it means for the global markets. We will also look at big box retailer Costco's earnings announcement and discuss what cyber sales mean for them. In the after, US payrolls dazzled, and we will talk about the impact of that in closing out the year and for moving ahead in 2020. Look out for the arrow. Here comes the before portion. Hobbes, Locke, John Stuart Mill, up to Bertrand Russell, all laudable English philosophers, but none of them was able to get to the core of the issue like the philosophical tandem of Jones and Strummer when they posited, if I go there will be trouble, if I stay it will be double. Brexit feels like we have been discussing it since the height of the clash's popularity. With this week's upcoming UK election, perhaps we are closer to some sort of resolution. PM Boris Johnson has summoned the electorate in an attempt to select a government for the third time in 4 years, and we want to look at what the financial markets have to gain or lose from the results. This show has no preference on who wins. We make no value judgments, nor see either as good or bad. We just want to make wise choices with our investments. The vote is certainly another referendum on Brexit and the Brexit negotiations, which have been and will continue to be one of the main drivers of asset prices. And as the pound has been the clearest cut and most telling asset mover based on Brexit and election news, it's the pound we'll focus on. When it looked like a Brexit deal was in the pipeline, the pound went from 122 to 130, and then we hit this impasse, and as a result, we have this upcoming election. The latest polls have the Conservatives with Johnson retaining PM at 43%, a comfortable margin over Corbyn's Labour Party, which is polling at 32%. With the Conservatives polling strong, we can make assumptions on sterling based on previous moves. Markets are pricing in the expectation that the Brexit deal gets done on the 31st of January. This implies that the Conservatives are probably going to win with a majority, and that would imply that there is more upside in sterling. It's moved from 122 to 130 on the expectation of the deal, but the deal is not yet done. It could probably move to 135 or 140. Pre-Brexit referendum, we can see sterling was in the high 140s range, so if it moves to 140 very rapidly between now and through the December 12th election, then that could have quite a positive impact on global risk assets and on European equities, particularly the DAX. The UK's benchmark index, the FTSE 100, generally underperforms when the pound is strong because it earns the majority of its income in overseas markets. Therefore, the DAX is the reflation index to watch. Look for the DAX to outperform the FTSE if the Conservatives are able to turn their lead in the polls to an outright majority in the House of Commons. When Costco opened in China earlier this year, it evoked US Black Fridays of yore. The American retailer, with a cult-like following, had Chinese shoppers waiting for 3 hours from the entrance of the parking lot to the front doors. Thanks to a partnership with Alibaba, Costco has already had an online presence in China for 5 years. But if the mayhem surrounding the Shanghai store's grand opening are any indication, Costco could have major growth potential through Chinese brick and mortar. Costco is the rare old-school retailer that evokes such loyalty that many prefer to go to a store than buying online. Over the last 5 years, Costco's stock is up 110%, outperforming the S&P 500, which itself is up 51%, and bucking the negative flows, crushing other brick-and-mortar retailers. We cannot question this real-life strategy, but now is the time for Costco to show strides in cyber sales. The retail sector shined with 20% year-on-year growth in online purchases this Black Friday, and a failure to keep pace by Costco could put their short-term stock gains in jeopardy. Should same-store sales and online figures come in weaker, we could see some profit-taking on Costco, which is up an enormous 43% year-to-date. Costco's stock price needs to maintain above the 281 level. That was the failed July top, and then that level became support in the October sell-off. US non-farm payrolls announced with authority, smashing the 180,000 estimate and arriving at 266,000. And last month's week payroll number was revised upward by almost 30,000 more jobs. On the news, the S&P popped 50 basis points. Solid, but not euphoric. The 10-year bond yield moved 6 basis points higher, a more convincing move. With the Fed now content to sit on their hands, the markets seem happy with the 2019 recession that never was, and are perhaps optimistic that the recession of 2020 will never be. For equities at least, we are, as we have stated before, in a stretch where good news is bullish, and bad news is bullish as well. It's all bullish. Let's pay attention to how yields close out the year, and if the US 10 years take out the 2% level. There you have it, UK election, Costco, and US non-farm payrolls, all inside one episode of Before and After, powered by Refinitiv. Thank you for joining us, and we'll see you next episode.